Hello everyone, and thank you for watching my West Summerlin update video for October. As a 10-year resident, these videos are dedicated to current owners and potential buyers in West Summerlin. Today, we're going to cover this month's sales in West Summerlin and compare them to last year. Then, we'll see how we stack up to the rest of the Vegas Valley. We'll segue into the current inventory levels in West Summerlin and then break them down in terms of how many are short sales, how many are foreclosures, and what comprises the traditional sales. Last, we'll take a look at some of the new retail developments around Summerlin. So first, let's take a look at last month's sales numbers. We sold 35 homes in West Summerlin last month for a median sales price of $285,000. Now, the good news is that we haven't sold that many homes in a month for over 6 months. Now, the bad news is that compared to the 28 sales last year, the median sales price only went up about 10%, from $260,000 last year to $285,000 this year. Astonishingly, most homes are taking only 21 days to sell. What this tells me is that homes on the low end are still selling well, while the higher priced homes are meeting some resistance now. So now let's back this up and take a look at the current inventory. Right now in West Summerlin, we have 68 homes for sale. Now this is up 11% from last month when we had 61. But remember, back in June, we only had 18 homes for sale. So we've more than tripled our inventory in only 4 months. Now, let's get back to what's selling. Last month, the average list price for homes that actually sold was only $312,000. Now, of the current unsold inventory, the average price is $393,000. So we're talking almost a 30% average price difference. So again, this illustrates that although we're still selling a healthy amount of homes in West Summerlin, it's the lower priced homes that are actually moving. Next, let's deconstruct what our inventory is actually made of. 6% of the market are short sales, while 9% of the market now are foreclosures. This leaves 85% of the market as traditional sales, which is actually cool since that's 6% above the rest of the Las Vegas Valley. However, last month, we had 92% of the market as traditional sales, instead of 85 now. So we're starting to see more distressed sales pop up. Okay, now for some development news. First is the shops in Summerlin. As you can see driving from the 215, progress is really starting to move along now. Scheduled to open October 9th of next year, we're now only 11 months away from having our own shopping mall in Summerlin. Now, Tivoli Village is working away on their second phase. However, that won't be open now until spring of 2015. But if you happen to have driven by Hualapai and Sahara, you may have noticed that last month, the developers of Tivoli Village broke ground on a new retail center. I don't believe the news has even covered this yet, but I was able to find out that despite rumors last year of Walmart opening as the major anchor tenant, 4 major tenants have already signed leases. Sprouts grocery store, TJ Maxx, Home Goods, and Steinmart are all set to open once the construction is completed. Now, I haven't been able to get a completion date yet, but I would imagine that it'll be sometime late summer. That should be like the grand opening time. Okay, let's wrap up what we've learned and try to make some sense out of all of this. Sales last month were exceptionally strong. However, they're tending to be very strong on the low end of the market, while the high end is starting to meet some resistance. Inventory has tripled since June, and we're starting to see a few more foreclosures and short sales pop up again. We've got some really exciting commercial and retail development on the horizon, which should help to maintain our home values in 89138 West Summerlin. So what should you do as a seller? Now, if you've been watching me for a while now, you know that I've been a huge proponent on just selling these past few months. The holidays are now upon us, which is never good news for sellers. And next year really looks challenging to say the least. Even though it's not the best time of year typically to sell, if you're going to sell in the next few years, you had better do so quickly. If your home isn't under contract in the first month, then most likely it's just overpriced. See, most homes are under contract in about 3 weeks, so don't be stubborn and hold out. Reduce the price and exit the market before you wind up selling for much less down the road. Now, if you're a buyer, it's a bit more complicated. See, many lending changes are about to hit on January 11th. So if your debt to income ratio is a bit high, you might have to jump into something before the end of this year. Otherwise, next year, you may find yourself only able to qualify for a home like $100,000 less than you can qualify for right now. On the other hand, if you aren't worried about your debt to income ratios, then time is just vastly on your side. My advice is to take your time and make a well-educated decision that ensures that the home you're buying is of a reasonable value. The last thing you want to do right now is overpay for a home and lose potentially 20% next year. Now, thank you again for watching. If you liked all the information in this video, then definitely, please, check out my Las Vegas monthly update video, which delves more into the overall health of the real estate market. Please, click here to subscribe. Have a fabulous Thanksgiving, and I'll see you all next month.